Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update. And this one is slightly later than usual. We had a lot to take care of this morning. We tried something different yesterday with our Crypto Wave show, which is a talk show about the latest and greatest things happening in the cryptocurrency space over the previous weeks. We kind of wrap it up all into one chilled out talk show in a real longer format. So I hope some of you enjoyed watching that. It's something that we'll do regularly on a Friday, and we've got lots of cool things planned there, along with a hell of a lot of other stuff that we need to get cracking on with here at Allincrypto to make sure we are that number one stop shop when it comes to the cryptocurrency space. So in this daily market update, I think the best thing for us to do to start is cover what took place yesterday in regards to economic data in the United States. Now, of course, economic data is going to have a bearing on monetary policy. We're currently in a situation right now where interest rates are high. There's a real burden on the debt markets as a result of this. And ultimately, despite the fact that we had good economic data yesterday, it's kind of a double-edged sword. We want a good economy for markets to do well in. Markets typically don't do well in recessions, periods of stagflation, et cetera, et cetera, et cetera. However, good economic data is a double-edged sword in the sense that actually, well, that's going to make sure that the Fed, if we get good data, a strong economy, it's going to sort of take the haste out of cutting interest rates. And on the back end of yesterday's numbers, which of course we'll dive straight into, we had a 256,000 jobs added to the economy in regards to payrolls. I think the expectations for this were, 160,000? And it was a beat on the last one. We've seen really on the back end of the whole March 2020 shutdowns and things, insane jobs numbers, well exaggerated. And I think there's an element of everything that took place being baked into that. But because we've got this really good jobs number, ultimately that shows a strong economy. And whether you believe the stats or not is an entirely separate debate. And that means actually the Fed, whilst inflation is certainly still what they would call elevated at 2.7%. Remember, their target's 2%, certainly for the CPI. The PCE is actually a little bit lower, or core CPI is a little bit lower. But ultimately, because inflation is still elevated, they don't want to lower debt. They don't want to lower interest rates too soon. And also, you've got this real selling off or continued selling off in the bond market, certainly in the UK, more so than the US. Central banks aren't going to want to cut interest rates too soon and lower the return on that debt, making it less attractive and potentially putting more downside, certainly whilst they're not stepping into the bond market on those markets. So this data is really important to watch. I know we're in crypto, we're kind of in a little bit of a bubble, but ultimately we dance to the same tune that the markets do. There is a correlation with things like global liquidity, et cetera, of course, very logically. And that has everything to do with the sort of monetary systems and the devaluing of them, the creation of them. And of course, you know, Bitcoin, all markets are really now, I won't say all they are, but a big part of them is essentially being a hedge against a devaluing fiat system. And that's always been the great game. And that's why you should all be investors, because ultimately it's, you know, it's the best way to keep up with economic policy or certainly the fiat systems and their devaluation, and actually gain the system, if you will. So US payrolls came out yesterday really hot. And also, much more than expected, but unemployment rate also falls. There's a correlation, we've shown you this before, between the S&P and unemployment. Unemployment rises, typically, or certainly starts to really sort of gain traction. Typically, the S&P will do the opposite, and vice versa. When unemployment's at a low, market's typically at high. So, good economic data yesterday, but despite that, certainly the Dow, the crypto space held up really, really well, but the Dow and the stock market seemed a little bit more stagnant. And this is, again, back to what I said at the start, because ultimately markets want interest rate cuts. I think they're going to do just fine without them, as we've seen thus far. But markets constantly pricing in what's coming. And actually, with this data, it's kind of reduced the probabilities of interest rate cuts, which on the back end of Wednesday's minutes showed to be less forthcoming. Instead of 5, they're now looking at 3. And actually, you've got the likes of, and this reads, the Dow tumbled nearly 700 points Friday as strong jobs reports cast doubt over Fed's rate cut path. And obviously, on the back end of this, you've got the likes of Bank of America releasing an article saying Federal Reserve Watch. And this is from yesterday, which was actually the anniversary, which we'll talk about, of the Bitcoin ETFs. Rate cuts were so 2024, moving the conversation to hikes. Key takeaways. After a strong December job report, we think the cutting cycle is over. Inflation is stuck above target with upside risk. We don't expect next month's payroll vision to change the story that the labour market has stabilised. The conversation should move to hikes, which could be in play in the year-on-year core PCE exceeds 3%, and inflation expected to stay elevated. So it's only just elevated. There's also a story with a bond market that they need to protect. What you've got, and you can see certainly the dollar's reaction to this, the dollar spiked higher, ultimately because the 10-year yield spiked higher on the back end of this. And the 2-year, which interest rates are very, and let's just throw it on here, Fed funds. The 2-year and interest rates are literally directly correlated, and we'll put these both on log, and you can see they're kind of coming to the same point here. The real question moving forward, okay, is are we going to have to deal with interest rates where they are for longer? I think actually that's looking more probable. In fact, in the UK, I think with what the gilt yields are doing, we're likely going to have higher interest rates for longer. That does put pressure on the markets because it ultimately strengthens currency through the demand sort of driving aspect of you need more currencies to service the underlying debt that they're sort of based on. So despite good news in regards to the economy, this has, of course, lent on the markets. You know, you can see the likes of Tesla, they've got some of their own issues. Tesla very close, very annoyed. In fact, we might just redraw this pattern to see, you know, if we can get this as a target. We get that $500 target for Tesla when it was 200, it got to 489. But the SPY not reacting very well to this. The SPY's been going higher and higher and higher. And when you get sort of a sell-off like this, people always are going to want to call the top for the SPY. I'd warn people against that. I do think it's still in an uptrend. But we really need to see what happens here. You know, we had a kind of leaning on markets broadly. Despite that, I must say the crypto space did rather well. In the crypto space, you guys know my thoughts on it. We've got higher prices that we're very much destined for. Do I have a more zoomed in chart here? Yes, remember yesterday we looked at the sort of re-emergence of this head and shoulders pattern, and we've warned people, and we showed you 5 examples of similar structure to this that all resulted in upside. That's the problem with betting on a smaller time frame pattern in a broader uptrend. But you can see that, certainly if we go to the 8 hourly, you know, we're sort of consolidating around what could be a potential neckline. I wouldn't go short this. I wouldn't get out crypto for this. I'd happily hold through it because I don't think I'm smart enough to time every top and bottom. I think you have to chop in and out, and you'll lose capital every time you do that. And certainly if you're wrong on that, it only takes one mistake. It's a costly one. And with crypto, we're talking 20, 30, 40% costly. So crypto held up relatively well. Gold also did quite well on the back end of this. Where's my gold chart? Here we are. Gold sort of saw a bit of a resurgence on the back end of this. Silver too, but a bit of a mixed reaction. Generally, what we're looking at now potentially is a readjustment in regards to rate cuts this year. There's obviously an optimism towards them cutting rates, and that's going to be taken out somewhat, and water will always find its level, and we've got to sort of see that for the cryptocurrency space. But when we look at Bitcoin, you guys know the story. We've painted a very clear picture technically, and of course, fundamentally, we are now, 19 days until Trump takes office, and I think there's going to be some unbelievable things coming on the back end of that. Really, really interesting news. Meta shareholders are asking if the company can add Bitcoin to its treasury. Seems Mark Zuckerberg himself is also bullish on Bitcoin. Now, who was the other one that we saw do this? Was it Microsoft? I think it was Microsoft. That got rejected heavily, and there was very low participation. So this is being asked for. Whether this actually happens or not is another story, but it's more likely to happen under the new regime because obviously there was a massive sort of choke point 2.0 and all these things, haste against the cryptocurrency space with the previous sort of administration. And that's going to be handed over on the 20th. So this is interesting. Are Meta going to buy Bitcoin? That would certainly be a bullish narrative that sees continuation in the trend. We shall see. And let's celebrate yesterday, because it's been exactly 1 year since the SEC approved the first Bitcoin ETFs. Cheers to all those who celebrate. And looking back, I forgot about the issue with the official approval orders on the SEC website, but this was indeed real at the time. And you can see James so far reporting on this and the fact that they approved them on the 10th of January last year. Obviously, it's been an unbelievable year for Bitcoin ETFs. Here's a list of the largest ETFs 1 year after they launched. Even if you inflation adjust the assets, 4 of the Bitcoin ETFs are in the top 20 US ETF launches of all time. You've got IBIT, you've got Fidelity's Bitcoin, you've got 21 shares. Actually, interestingly, a Hedera governing council member is now set to be president of 21. And then, of course, you've got BitB. So you can see IBIT's shares is the best performing ETF ever in regards to 1 year as it relates to inflows. And then Fidelity is 4th. And then lower down the table, you've got ARK. And obviously, you've got Bitwise. That are all looking to file a whole host of different products that I think are likely going to be coming this year. So fundamentally great story. Was there something else? Yes, there was. Senate Banking Committee hiring news. Pre-Three Folk familiar. Eamon Simons, he's joining the panel as Chief Counsel from the SEC, where he worked for Commissioner Hester Peirce. Now, Hester Peirce has been very supportive of the cryptocurrency space, and this is ultimately good news for crypto. We're seeing this sort of reshaping of the administrative body, and ultimately I think that's going to be very... And they're all very pro-crypto. Even Paul Atkins, we looked in our sort of talk show yesterday at Paul Atkins' background. Very impressive, very leaning or very pro-crypto indeed. And in regards to the markets, there is still this threat. Absolutely, it can't be sort of understated of this head and shoulders playing out. But we've shown you plenty of examples of what could have been head and shoulders actually resulting in the exact opposite. Remember, these are short-term patterns in what is very clearly a broader uptrend. And it's very risky to bet against the broader trend. Let's say you get short for that and it doesn't work. Well, now, crypto can move so much against you, you might end up having to buy 20, after a 20% move for something like HBAR, XRP, some of these. That's going to be regrettable because you're going to have 20% less crypto for the capital that you originally had. So a hell of a lot going on in the macro. There's a lot of uncertainty around the macro. And when people talk about the kind of booby trap as it relates to markets, it really is the debt markets and some sort of disorder with them. Is there a kind of natural progression for central banks back into the debt markets from a QE point of view? Yes. Or is there some sort of a problem with it that forces their hand to kind of get back into the markets? And that would be sort of another liquidity driving event. Both roads leading to the same outcome, I think. I don't think they're going to allow the debt markets to die. I think stablecoins are going to play a massive role when it comes to debt markets. But there's a hell of a lot going on. We'll try and keep you informed on a day-to-day basis. Do not fear, guys. Allincrypto is here. That is it from me. I'm going to love and leave you. Have a smashing Saturday. And I'll see you all in the next one.